May profits be upon you. Let's take a look at Euro USD. Let's go right into it. Don't you like it when YouTube guys go right into the analysis instead of a whole bunch of preamble, right? Now, on the weekly, we can see Euro USD has hit a weekly zone of demand, right? And I marked it here, right? But you can see the first mitigation of this supply zone, this demand zone was here, right? All right, delayed it a little bit, and then we see the volume and the momentum enter the zone here, okay? This zone was broken. All right, this zone was broken, it came through, boom. Love to see that. Why? Because my antenna goes up, of course, because I'm thinking that there may be a flip coming. All right, these are the kind of things that should set your alert right off. You know, you should have an alert here that says, okay, a demand zone has been broken. All right, when the demand zones start to fail, that you already know that it is confirming or order flow, bearish order flow. Okay, so I'm going to be looking out for a flip from demand to supply, and we'll understand that supply is in control. Right now, I'm already marking the next zone of demand. Like from this one, from this mitigation, we see demand formed here, and I'm going to mark it because this is a chain. It starts a chain of demand, and that's what you want to see. All right, you want to see it hold though and break supply. Right, this is unmitigated. So price is on its way to it. But what has me what has me on alert is the fact that this demand has broken. Let's take a closer look at it on the daily, see if we can see any more details. All right, and of course we can. All right, you see the mitigation here, chopped up, boom, 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 started breaking demand here, started breaking demand here. These are viable demand because they broke structure and took liquidity to the top. That's how you know they're valid, and that once they're broken, it's a statement by the market saying that the order flow was bearish, son. Okay, so all right, so we see the demand here. All right, we see the reaction. Price comes into it, reacts. Price comes, mitigates again, reacts. Price breaks through, boom, right? What am I marking? I'm marking the extreme of the reaction, because if price comes back to that, that is a high probability short. And that's exactly what happened. Yeah, it swept on the way up. Got to be careful for that. All right. You see all these wicks coming up here. You know, there's stop losses up there, and price is going to come back and get it. All right. The market's going to come back and get those. All right. You look for those sweeps. After the sweep here, price drop. Look where it closed now. This is a wick high. So you know it's a liquidity grab, period. All right. Comes back down, closes below the zone. And this is where you could have took your trade anywhere in here. All right. Just make sure that your stop losses, your risk is managed, right? And it dropped. Okay. So this is the open Sunday, right? And you see how price just opened straight down. And I was looking for this kind of scenario when I gave the initial analysis. So if we go to the 4-hour, you can see that price after the break, price did come back to the extreme for that high probability short. So we missed that one. All right. Chopped its way down, boom, boom, boom. All right. Now we're on our way to the other unmitigated zone of demand, right? Let's go down to the 15-minute. And we can see since the open, price has been bearish. All right. I was hoping that it would, oh, come on, man. I was hoping that it would come back up and mitigate this zone of supply here. All right. And it hasn't to this point. That's fine. All right. It might be a big ask because there is a lot of momentum to the downside. So what am I looking at? I'm looking at this zone right here. Okay. And I'm going to mark it as such. Come on, man. Here we go. All right. I'm going to mark it as such. I'm going to put supply on that. And what I like about this scenario is, one, this zone was the last demand before the break of this low. All right. High time frame break of structure. All right. I like it. This is unmitigated. All right. Was there a sweep of liquidity? Of course, because it broke structure and everything. So, you know, it took liquidity. It left a displacing impulse to the downside. This is an inefficient move. Price has to come back and rebalance the imbalance here. This is imbalance. I like to see imbalance below a zone because price likes to come back up and fix it. All right. And rebalance it. Right. So this is the other thing I like. This looks like inducement to get buyers to get sellers to take early shorts. But what I tend to watch is that low price. If price doesn't take that low, if price starts to dither around here, it gives me a quasi up to the upside. Hey man, it's coming back to mitigate that unmitigated zone. And if we get a proper reversal pattern, all right, where you see a high made, a pullback, a higher high, and then an impulse that breaks that pullback low, wait for price to come back up into this leg of the impulse and take that high probability short to the downside. That's what I'm looking for. That's what I'm looking for. So far, things are cooking. Things are cooking. I will see you in the next video. I hope you enjoyed this. Leave a like and a comment to help support my channel, to help it grow, all right, to feed the YouTube algorithm. And I will see you in the next video.